We're going to go with our first scenario, which is going to be an employee that makes $60,000 a year and has about $10,000 in federal withholding. So let's scroll down. We're going to select this person as single, and they will say they have a job. For the scenario, they don't have any dependents. And we're going to go through. They have one job, salary job, and they've had the same job all year. We're saying they get paid every 2 weeks, and their last pay period ended 2024, and they got paid 12/20/2024. And we're going to say the wages for this pay period is $2,000. And we'll say that their wages year to date, which you'll see on their pay stub, is $58,000. So actually, we have how much? 60,000. Make $60,000. Yes, that is correct. Now we're going to go over their federal taxes paid. Year to date would be $10,000. Pay period would be $200. And federal taxes paid year to date is $10,000. Just make this a nice round number. For the sake of ease, we're going to say that they did not contribute to a Roth 401k. You would put this on there because, of course, this is something that will impact your taxable income. Same with your health insurance. For the sake of this, we're going to say none of the above. And we're going to say this person doesn't have any self-employment taxes, no additional withholdings, no additional estimated tax payments. Once we go through that, the adjustments to income, I generally advise people to use their prior year stuff if they're not sure about what they deducted or added into those accounts, especially because if it's pretty consistent year over year, it makes it easier for you to estimate that. For the sake of this, we're going to just say no. And for this person, we're going to do a standard deduction, 14,600. If you find that your mortgage or the charities that you make year over year would be higher than this, then I would suggest you put those itemized deductions in there. Next, a tax credit. Of course, this is dependent tax credits. If you have a child and you pay for their daycare, a lot of these things are pretty unique. If you have these things, you know by using like per year taxes or consulting with your tax professional. For this person, they're just an employee and they're curious to know what their withholdings are. I'm going to just put in my age. This person has a projected refund of $4,781. Just based on everything that they have, this was their projected tax obligation. So they can see that they're going to get a refund. This is a person who made $60,000 this year and holdings of about $10,000. And here is their projected tax refund based on the information you have in here. So if you look back, you can see all the detail that we put in here: the pre-tax income, total federal withholding, no deductions, their taxable income, and of course the taxable credit. So they're going to get a pretty big refund back. This is good to print out.